All right, welcome back to Investor Edge, simplifying smarter investing for everyone. Today is February 19th, Wednesday. I am going to go over my midweek kind of recap, updates, things to look forward to, kind of the takeaway from FOMC meetings or minutes that were released, and how financials didn't really react to it. Nothing of note. It's kind of maintaining the same thing, a little bit of hawkish tones, but nothing, it seems like, hold steady for a little longer is kind of the idea, which with strong financials, big banking should continue to maintain the performances that they have. Before we get really going, just a reminder, this is for educational purposes only. Please do not take any of this as legitimate financial advice. I am not a financial advisor. Some of the stocks today I will be talking about specific prices, or at least you'll be seeing them. Those are kind of just round whole numbers that are just plain, but they're not really my technical breakdowns or spots that I'm probably going to be buying in. It just depends. But it just gives you context and things to consider. We like to combine fundamentals along with technical analysis. Again, most of this trading is based on a few days, maybe up to a full trading week session, not necessarily multi-week or multi-month or anything like that. I'm really focused on the shorter time frame things just because the options, markets have been really volatile, especially in a lot of these big names. Really get some good movement out of them and some good risk to reward. So that being said, let's go ahead and pull up the notes. I got a lot to go through, and we'll pull up a few charts. So market update, watch list update for February 19th. Let me change this music. It's kind of boring. Something. I just like something I can talk over. All right, key market events and trading opportunities this week. Markets have been relatively flat. Several upcoming catalysts to still consider. We have the FOMC meeting minutes released today, 2 p.m. Eastern time. Like I said, nothing really out of the sorts. We'll dive into that a little later here in my notes. Here's what to watch for in the next few sessions, and we're really heading into next week. I mean, my biggest takeaway is the market is now looking for its next catalyst of whatever that may be. We're kind of range bound, higher highs, kind of tightening near all-time highs, right? So until we see any major changes, again, I'm going to maintain a little bullish bias for anything that I'm going to be trading, unless things really, come apart in other areas. So key earnings reports, let's just talk about a few of those. They kind of play into that. Analog devices, ADI, semiconductor industry, tends to impact, sector sentiment. They reported revenue $2.42 billion, 4% year-over-year decline, but surpassing analyst expectations of the $2.36 billion. Adjusting as earnings per share were $1.46 or $1.63, exceeding forecasts. So share surged 9%, reaching all-time high at $242. So still buying it up. Key takeaways: shareholder returns announced an additional $10 billion share repurchase authorization, bringing the total to $11.5 billion, and increased the quarterly dividend by 8% to 99 cents. So, that is signs, as we've talked about before. Companies increasing dividends, additional share repurchasing, right? All that kind of stuff. They missed on a few areas, right? It's just, how does that all come apart, overall, strong revenue, beat expectations, a little bit decline year over year. But, overall, good, right? Sector outlook: CEO Vincent Roche indicated potential bottoming out of analog chip market cyclical downturn with expectations of growth in fiscal 2025 driven by industrial and automotive sectors. Okay. So, pretty positive outlook, right? Solar Edge Technologies, key player in renewable energy. Results may influence green energy stocks coming up, so something to keep on mind. Earnings performance: reported fourth quarter adjusted loss of $3.52 per share, wider than anticipated loss of $1.57. Revenue stood at $196 million. I'm going to just tell you right now, solar related stocks, they are a crapshoot. Something I definitely stay away from, but I'm mentioning it just because. Do I think it's going to really affect the overall market? No. But just things to be considered. I try to cover a little bit of everything when it comes to stock related stuff. So revenue stood at, actually what it really ties into is kind of what's coming out with the household stuff, since a lot of new homes require solar. So that's kind of what was in my mind behind looking into this. And we're going to talk about that. I believe there's reports out tomorrow. We'll double check. Revenue stood out 186 million, slightly above estimates, 189. Okay, pretty good. Market reaction: despite missing earnings, shares jumped 16%, attributed to improved gross margins and positive free cash flow. Adjusted gross margins improved from negative 39% from negative 305% in the previous quarter. Okay. And forward, yeah. The solar stuff is just weird. Positive cash flow achieved. Positive free cash flow in Q4. Expectations to maintain this trend. Okay. Guidance. This is where a lot of it probably came from. Projected revenue between 195 million and 215 million, with an adjusted gross margin of 6 to 10%. That is their adjusted Q1 guidance. Cool. Walmart reports tomorrow. Consumer spending trends. This was going to be a focus, right? Walmart's a big player, going to have impact in other consumer habits. So that's kind of a key one to think off of. Again, if we continue to stay this range bound, is it so much the individual company report is going to spike something to really start getting the market to pick a direction and get going? Who knows? But it's just things that kind of keep in the mind frame going forward. I'm going to definitely be watching Walmart. They are on my watch list. Technically, if you look at them on a daily and, just with candle formations and all that, it keeps getting bought up. It's just holding that strength up there, right? It's really playing into the overall market theme. NVDA, yeah, I keep talking about this one. It's big, significant event, right? It really is. I mean, it's one of the biggest companies. It really had probably the largest impact on a whole market, let alone just the sector, just because of the growth that it has done, what it has achieved in the last couple of years. So, and that's going to give you insight to, even though a lot of other tech companies already reported, what's going on with NVIDIA. That's the big question, right? So definitely expect high volatility. It's going to be a good Monday following this to really see what's going. This is probably going to be the one that really, I think we're consolidating this week. Next week, we're going to find that direction. We're going to start moving, and that's going to set up more opportunities. FOMC meeting, we're going to talk about that later. Yeah, so housing starts and building permits. It's a key indicator of economic health. Definitely going to be involved with the home builder stocks and then existing home sales. So that kind of ties into, get a little glimpse of that with some of the things that are involved. Solar, right? California, other states require solar. Most new homes require solar to be put on. So it's not all in one, but you kind of get these bits and pieces that tie into it. So if they're doing better, then that's telling you that new home builders are still building. But what does the sales side of it look like, right? If they're not selling anything, they're just sitting on inventory. That's going to get costly. So there's just a lot of ways. If you have to pick the angles in the market that you want to be. Am I going to be involved with home builders? No, not too much. It's usually not my cup of tea. I prefer to stay with things that are tech heavy to a degree. I like financials. Again, if you go back to my last video, I was talking about certain sectors. I'm going to stay with those sectors. Does that fall into the consumer discretionary type stuff? A touch of it, right? Bits and pieces of it, not all the way though. That's more of the other things I'm talking about. So with markets trading flat, short-term traders, what should we focus on, right? Post-earnings momentum, definitely want to see what's going to happen. Let this week finish out. We got the earnings, the economic data. It's a shortened week anyways, so it's really just kind of like, I'm not really taking a lot of newer positions when it comes to overnight stuff. Just, kind of waiting and seeing, digesting all this information. I think most people are as well. That's why it's kind of choppy and sideways. You don't want to get caught in that. You want to be trading when the markets are moving, not when it's just flat. Unless you're in, it's a good opportunity to buy things you plan to hold forever. Sure, you could look at that if anything's down or at a price level that you like. So, financials, right? That's the biggest one that is affected by FOMC. Nothing really happened. Everything was kind of just down a touch. Key takeaways. Fed remains cautious about cutting rates, waiting for more evidence, right? We've talked about before. You've heard from other people. Fed is very reactionary to things. They're not going to be the first to cut. They're not going to be the first to make any moves. They want to let data roll in as much as possible, absorb that trend, and then make decisions after the fact. So hawkish tones were present, concerns about inflation risk, right? We've talked about it, potential trade, immigration policies, the tariff stuff going on. There's a possibility that rate cuts could be delayed further with no clear signal on when the adjustments will happen. Market expectations for rate cuts in June may be too optimistic. I think that's going to get repriced in, right? We'll see. There will be some reports that come out kind of betting on when are the next rates, and they'll start factoring in, and they get really close, really good at it. There's a lot of ways they kind of come up with that. So positive side for financials, higher for longer rates, still good for banks. They benefit from high net interest margins. No immediate talk of rates is the worst case scenario. High rates hurting credit markets seems unlikely. Large banks like JPM, Goldman Sachs, Citibank, and Bank of America are still well capitalized, benefit from the resilient economy. Yeah, so the financials can get hit pretty hard when they do, but right now. So I think the upcoming data, right, housing reports, consumer spending trends, this is going to provide more clarity on whether economic strength supports what we're seeing in these particular stocks and companies underlying, right? But again, you're trading what we're going to see, not what we're going to think. So the risk, just to make a little bit of a case for it, right? If rate cuts are delayed, credit risk could arise, especially in smaller banks, right, that rely on cheap debt. More hawkish Fed stance than expected could lead to short-term weakness. We'll see. Bond yield spike could create short-term volatility in banking stocks, making swings trickier. Yeah, you got to kind of factor in bond yields, but I don't necessarily look at that every day. I just kind of, again, I listen to a couple of different live reports in the morning, Schwab Network, a couple other ones, and yeah, I kind of pick up on that stuff, what's going on, but really I'm trading off what I'm seeing off my own technical indicators and just kind of the markets behind it. So yeah, I think markets, financials are still good, right? Large cap banks, strong position because they navigate higher for longer rates better than everyone else, for sure. So the fact that we're kind of sitting in that area, definitely going to be, maintaining that. Short term, expect a little bit of choppiness. I want to see if, how it's kind of playing off the whole week thing, right, with the broad market. Yeah, not extremely bearish for financials. They didn't provide much clarity. They never really do. But so we'll see. If financials dip tomorrow, I'll probably be a buyer looking at support levels. So that's just kind of my last bit to that. Market sentiment, macro factors. Market remains range bound, right? Again, we just kind of talked about that. So these are just kind of I'm going to have 4 or 5 key things to jump through. NVDA earnings Friday. Major driver. I think that's going to really change or potentially be one of the many thousands of catalysts that could be. I think a lot of people are kind of watching for that, along with the other stuff that's come out, along with it's a shortened week. So a few things kind of making the markets just kind of hang around. Housing data definitely could be a player into my financials that I'm going to be involved with, along with some other things that I'm not necessarily too involved with. AI semiconductor trade, is it still strong? I think NVIDIA is going to confirm or deny that. So, watch list breakdown. So, what do we got? I got Apple is maintaining my watch list, hanging around. They just had a new report on their cheaper iPhone or something that they're going to do. So they're in so many things. It's Apple. Their recovery from the couple weeks ago, very solid. They're just totally different space. They do, yes, they have AI and all that, but they make everything. A lot of people are talking about, well, they haven't really innovated, things like that. True, but their financials state otherwise, right? That's like I always say, financially they continue to beat or meet expectations. That's what you got to trade off of. As a product-wise, as a company-wise, could they do other things? For sure. Anyone can. Could be a defensive play if the market volatility does pick up. I want to see how this might be a counter to the rest of the tech stocks if things get weird. But I just like it. On the technical level, I like where it's at. It's kind of holding that same thing with the market sentiment, kind of that flat sideways move. I want to see what it's going to do when we break here. We could get post earnings highs, right, and start breaking out, which would be nice. Because on earnings, I think it spiked to like 250-ish, 260, something like that. So that's kind of what I'm keying off of. If we hold in here, if I see any sort of pullback and strength closing into it, I'll probably be looking for entries. App 11, it's extended, you know, it's very strong, it's very up. Maybe watch for some pullback, some retest. Yeah, a little too rich for me. It's up there for sure right now. I mean, that 520 level is going to come into play again. Is it going to be in a few weeks? Is it going to be in a few years? I don't know. Citigroup. Financials been under pressure despite strong earnings earlier this season. Yeah, this kind of goes in line. I'm looking for anything back into the 82 range. See what that looks like. If their strength comes back into it, it's kind of dipped into that before. We're going to get bought up, and then we're going to proceed to, I think it was like 86, 87. I might be looking for calls if it gets down to 82 and it looks like it's finding support. I might be looking for calls into the 86 level. Costco, current price, way up there. It's just been a monster. My idea with Costco is Walmart earnings, right? Could influence that sentiment. If Walmart reports strong results, Costco could benefit. You know, it kind of goes hand in hand, or very close together. So Goldman Sachs on there as well. Again, I'm playing a lot of financials. It's been strong. This one, aerospace. You know, there's going to be continued strength in aerospace and defense. More, money flowing into that now with some changes. It's gapped. It's moved higher. It's moved higher today. I want to see it kind of find a little bit longer term settle in. You know, I like the way it moves. I like the trend that it's on. I'm not going to just jump into it, but it's broken out and it's just, it's been climbing very strong, and it's done that before. So JP Morgan back on my watch now that it's reclaimed those areas that I was buying calls into previously. When I bought calls for 277 when it was at like 269, 270 a week or so ago. I sold it when it was kind of meeting my strike price. I just was trading the calls itself, just trading for that volatility. Did pretty good. Actually, no, I sold them prior to that because I think overnight it was up like 60, 70% or something like that. Now it's kind of settled back in, tighter range, financials rally. I think we could get back up to a 285, 290 level, right? Lam Research, LRCX, ticker symbol, NVDA earnings definitely going to influence it, or should influence it. Kind of same thing, waiting for a pullback. Meta's a curious one. I want to see. I sold my position at the 720-ish and kind of looked regretful when it got to 740, but it's back down to 703 within a matter of days. So I bought at 704 initially, sold at 720 after it chopped around for a couple days. Obviously, it is extended. It's high. It's all these things that people say. Now it's back down to a level and it broke a technical level, and I'm going to use this is going to be my only example today on the charts of what I look at, and I want to see if it reclaims it, because right now, technically, it's not something that I would want to get involved in, but that could change quickly. So definitely needs to hold 690 to 700 to stay, bullish, right? I think a lot of people kind of can just see that. So could be big rebound post NVIDIA earnings. I don't know. Maybe not, Netflix also killing it. Maybe breakout if momentum continues, kind of in that consumer discretionary area. If spending looks good, right, Netflix could benefit. Principal Financial Group, PFG, lower volume financial stock, kind of same thesis as Citi, Goldman Sachs, JPM. Might get a little bit more movement. It hasn't really done much, I don't think. I haven't looked at it. SLB, Schlumberger. Energy stocks have been weaker. Oil prices will be key. This goes into some of that home building stuff possibly. Breakdown under 42, bounce if crude prices recover. So, I don't know. We'll see. On a chart, I liked it. I don't know exactly why, but I liked it. It fell into my screener, and I've added it, and I'm going to watch it. Visa, definitely going to play with consumer spending trends, right? Could move on a few things. It's financial play. Also could move on Walmart earnings, right? I think everyone's card that they have in their pocket, about 90% of them probably have a Visa of some sort. And then, of course, Walmart. I like how it's continuing to post strong numbers. If it does continue to post strong numbers, retail stocks like Costco, Target, Amazon could move. I think Target's kind of in its own boat right now, but it could. I think they've been beaten down a little bit. So, recent reactions, pulled back post-earnings, AppLovin. Meta seen profit taking? Yeah, I think so. Netflix holding up well post-earnings, but we got to, start seeing it move up if it's going to move up. Semiconductors remain key players, right? Key takeaways, NVDA earnings is going to dictate or help give that tech sentiment, get that catalyst going, get everything moving going into next week. I think a lot of people are going to pin it on NVIDIA, but we'll see. So, housing starts could move, retail stocks. I think we pretty much touched on all of it. I mean, overall, this is my bottom line takeaway. Markets are waiting for a catalyst. I think next few days we'll set up some trading opportunities, especially in the tech and financials, waiting for those relative volume leaders and reaction after all this economic data and post-earning continuation. So that is where I am at. Let's pull up the one and only chart I'm going to be looking at. That is Meta. I'm going to show you. So after I screen and find things, I do look at dailies. I look at weeklies and all that. So previously I already deleted it, but somewhere in here. Yeah, I was right in here. When I was buying at 704-ish level, 705, something like that. And I was selling, I think I sold, not in here. I think it was on this day, a couple days after. So 2.7 from so from 2.5 to, no, I think it was, 2.12. I don't know, you could find it in one of the previous videos. So what has changed, right? Obviously it pulled back pretty significantly. I use anchor volume weighted average prices. I have them anchored off of the beginning of the month and multi-week. Those are my red lines. And I always have either a 2-day or a weekly, depending on the time of the week. If it's Monday, I usually just bring in the one from Friday or Thursday just to kind of give reference to. But ultimately, I'm just trying to play off that trend. It's not exact ideal things. I'm trying to get a feel for it. So we are now at a point where these longer time frames, right? You saw the respect of them. It got down in those levels, bought up, got down. It's kind of choppy, right? But still moving off of those every time it got higher. Meanwhile, these are gradually climbing. All right, these past few weeks, we had, it got down into the average weighted volume price, moved off of it, moved higher, back down into it. But meanwhile, it's just ever so slightly higher, moving higher. And then, see what I mean by that? So it's finding that strength and continuing to press higher. Well, now we're in the first week where the beginning of the week, so just a day ago, because it's a shortened week, has now quickly gotten below not only the previous week, but also the monthly as well, right? It has crossed into a bearish sort of sentiment. So, question is here, do we consolidate down here, break back above in the next coming, trading sessions and begin our climb back to all-time highs? Or do we get up in here, fade, and then ultimately shorter time frame, prior weeks, average weighted volume average price begins to cross over the key level of the monthly, and that shows a confirmation of a shorter term bias, right? Am I going to immediately short or something like that? No, because ultimately longer time frame, the chart is still, up, right? Look at the daily, Let's look at a weekly, right? Am I going to do that? No, because it could just get down to 782 and then just rip higher off of it. You know what I mean? Who knows? But again, I'm playing off of a few day period, and I'm using hourly charts to focus my trades. So when I see something like that, and I'm using anchored levels off of multi-week, multiple weeks, current week, and etc. That's just something that right there is a sign that something has shifted for now, but we could recover and get back to continuation, right? It's a little oversold. RSI is down in the oversold territory, So my question is, what are we going to do when we get to 50 level, 70 level? Where is the stock price going to be in line with that? Or is it going to continue to be pressing lower lows? Or is it going to recover? Or is it going to trade sideways, get back above these key levels and hold for a few days, and then ultimately really rally and recover? Right, that's what I want to see. But early signs of something that I am not a fan of when I have a long bias. So this is where it starts to shift for me. Again, you could have a long bias and be focused on, yeah, it's going to get down to 650, rally, it's going to get down to 665, rally, right? But I'm looking for stocks that I can get into over, today and possibly sell into the next coming days, right? I'm not talking about buying something, in a week and then holding it for 2 weeks on these particular charts. So we could look at, longer time frame, right? If you're one of those people that I want to be able to make sure I get it for the price I can. Well, if it does just so happen to get down to whatever levels, and then on a weekly candle time frame, if you see it's gets down to 650, consolidates, maybe even touches lower, buys up, touches lower, buys up, and then it starts to break, yeah, that would be your sign of a longer term entry and hold, and your risk to reward ratios probably in a pretty good spot, but that's not the type of short term trading I'm looking to do. But if you want to know more information about that, or specifically if you need help finding a time frame that suits you to find trades, there's tons of things to trade out there. You can't be in everything, but it's a matter of adjusting your trading system, so to speak, to fit your day in, day out. I'm much more quicker, shorter time frame, even with my longer term stuff, but on a daily frame, I'm a matter of minutes. So and then I have my long-term stuff too that I just buy and I don't even look at. I don't even look at the charts. I buy it when the stock's down. I buy more. I wait for earnings. When earnings come out, if they're good, I buy more. You know what I mean? I build all my trading is to my edge to develop to feed my long-term stuff that's paying me dividends over and over and over again. So that's the focus behind those. But either way, like, subscribe. I appreciate any feedback, and I'll talk to you next time. Thanks. Bye.